What's up, everybody? We are back for our Tuesday stream. This is the Trading Nomadic show, and we've got a handful of tickers to look over today. I got a few I want to cover real quick. If you guys have anything you want me to take a look at, drop it in the chat. After we go over a few of them here, I'll get to as many as I can before we run out of time. First thing I'm looking at is Bitcoin. Again, we are back above support here. If you haven't been following our show, we've got this large harmonic structure that we've kind of been keeping an eye on after that huge drawdown we had back on the 19th. It bottomed out at 30,000. We've slowly been making some higher lows over and over on Bitcoin, and I've really been keeping an eye on it, which brings me to another chart I want to look at real quick today. But right now, as far as Bitcoin goes on my chart here, I'm watching this support level at about 34,700, and then up here at the top, we've kind of got this zone. I think 42,000 is the number that I'm really waiting for. Looking back here from January 8th, before I can really be bullish on Bitcoin, I really want to see us get back up into this area and test it and break it. But for the time being, we are making higher lows, which does imply accumulation. It's kind of got the same structure that a lot of the market has right now. It's arguable, you could say it's like a complex inverted head and shoulders. It's more pronounced on some of the other altcoins and Ethereum, but that's what I'm watching, and we're coming up again up on this 36,600 zone. We got resistance between there and about 37.4. That's what we're watching right now on the lower time frames. We are showing bullish convergence down here. If you look, we're still making these higher lows, and at the same time, we are losing negative momentum, and even greater on this last histogram island here. So that's what I'm watching. But the chart I want to take a look at, this bright chart, is the stock to flow model. And this is a chart that's been around for years, and it has been extremely accurate. It's by a guy named Plan B. He's an anonymous crypto, I hesitate to say influencer, but I guess you could give it that label. And he's got this chart that it follows the the supply levels of Bitcoin over time. He's got an algorithm that references, it says this model treats Bitcoin as being comparable to commodities such as gold, silver, and platinum. These are known as store of value commodities because they retain value over large time frames due to their relative scarcity. And as we know, Bitcoin's got a limited supply of 21 million. It's never going to change. And that gives it, an implied scarcity. But this has been a great indicator of market tops. And there's a few, if you guys check out, look into bitcoin.com, they got a few other charts that reference some of these same variables that predict the tops. And what I've been looking at is I've been comparing this. If you're familiar with Bitcoin, if you've been in the space, you know that there is a halvening cycle. Every 4 years, Bitcoin becomes twice as hard for miners to mine, essentially making it twice as scarce because the block rewards are cut in half every 4 years. And I've been looking back at this 2014 cycle. We kind of got this same thing going on, right? Usually when these cycles end, if you look at 2014 and you look at 2018, they come, I keep blocking it with my mouse here, but we got this red, this price level here is turning red, turning orange, then we go into the yellow and up here, and it usually peaks once we start getting into this green territory, and this line in the middle is more or less a moving average of sorts, because the stock to, or I mean, not the stock to flow, the halving cycle gives Bitcoin this medial magnetism, a mean reversion characteristic, where it follows this general line. You might come up above it, you might come underneath it, but like a moving average, it always reverts back to this medial area. And if we look back here in 2014, you see I think we peaked initially in 2013. I'm sorry, 2013, April 9th. You got this peak here as we're starting to get into this dark orange, which is kind of the same thing we got going on. And if you look right about where we peaked on this chart, showing about April 15th, April 13th, the general vicinity, and we got this massive markdown, just like we have right now, and just like we had in 2013. I forget what the exact retracement was on Bitcoin, but it was about the same. I think it was about 55% back in 2013. And if you look up here where we're at now, it's, the timeline lines up. We've got our retracement, we're still entering this yellow territory. And I believe, don't hold me to it, I believe this is based on the RSI in some fashion. But again, we got the retracement. You got the mean reversion quality back, at least in 2013, where it came back down to that moving average. And then you've got that second peak. And that second peak was the blow off top. The same thing in 2017. You peak up in this green area, and that's the blow off top. We have not gotten a blow off top this cycle yet. History does not have to repeat itself, but history generally rhymes, especially when it comes to this asset, because of some of these qualities that Bitcoin possesses. And that's referencing the mean reversion, medial magnetism, whatever you want to call it. But it basically corrects down to a fair value, more or less. And that's based on the supply levels, with the halving cycle factored in. And we haven't seen that this year. A lot of people are going pretty bearish on crypto at the moment. And right now, short term, I'm kind of risk off. I like what I'm seeing when it comes to Bitcoin right now, but I'm not until we really get back above that 42,000 zone. I've been kind of cautious myself. I've been dollar cost averaging my position, taking advantage of the dip the best I can without really putting my neck out there too much. But based on this chart, if we are looking left, if we are referencing history, if history does in fact, repeat itself, I mean, we're right still on track. And if we fast forward a little bit on this chart, I mean, I think this specific chart puts us around anywhere from 85 to 100,000 at the top if we reach that medial line. Now, if you look at these previous cycles, the blow off top was substantially above that medial line. And that's essentially where after we retrace, after the blow off top, we kind of come back down and start hugging onto that line again. And again, this chart, it wasn't just made. This chart's been around for years. There's also an updated chart, the S2FX. It's another model that takes it has some other factors that's tied in with the algorithm on how it's made. And if we look at Bitcoin back here on our regular chart, we talked about the Wyckoff distribution up here, and then we got that large retracement. I think we ended up coming down, I mean, from our absolute high, we're at about 53, 54%. And I'm going to come back here on the weekly chart. 2013. I do have data for 2013. I kind of just want to reference, you know, the same thing that happened in 2013. I believe this is what we're looking for. So this is where we were at in 2013. Oh, and I lost it. Here we go. 2013. And the same thing, in 2013, we came down from this wick high. That one was about 75% from the wick. But if we're looking from these candle high closes, April 8th, 2013, it came down about 57%, a little bit further, almost about 60% from these candle close, this wick high again in May 20th. But, you know, if you were living through this in, you know, April of 2013, you probably thought it's over. You know, the sky is falling, run for cover. And I'm going to try to zoom in here again without losing my position, because I want to show you locally what was happening at the same time. If I could find it again on the daily. All right, so here we are back in, there we go. Sorry about that, but if you look back up here, after this huge drop from April 10th, we came back down and we started doing the same thing we were doing now. Or at least started. It's a little bit too early to really start doing that, but you know, you got this massive lower wicks on these candles coming up. It shows you how much buy pressure there was down at these lower levels. And what we do, same thing that we did this year, we retreated all the way back down to some of the most solid support we had on the chart. And, you know, it's moving a little bit slower than this year. I mean, you can't expect things to be identical, but same idea. You know, you start coming down, you wicked back up, you come back down, tested the lows again, and that's where you started seeing the price action take off again. And if you sold the bottom in April 13th, I think April 13th of 2013, by the end of the year, we were up another 1,700%. That's not a prediction. I'm not saying we're going to go be up 1,700%, but I'm just using this as, you know, a reference. It's not atypical for Bitcoin to have a massive sell-off like this in the middle of a bull run, and you know, that's what we're in right now. The sentiment on the street would imply otherwise, but you know, I'm being cautious when it comes to Bitcoin. But I just want to make a point that it's not atypical. This isn't something new. It's not, Bitcoin's not dead. It's been dead 10,000 times. If I had a Bitcoin for every time Bitcoin is dead, I would be loaded. I do want to look at Ethereum. Ethereum looks a lot better at the moment than Bitcoin. The same thing we were talking about a little bit earlier here on Bitcoin. You've kind of got this inverted head and shoulders pattern going on. And the same thing, after the sell-off, you got these massive wicks, massive wick lows, you come back up, and then you got the retest of the lows once again before starting to make these higher lows, implying accumulation. There's more market participants that are owning this asset as we move along here from our low on May 23rd. But again, Ethereum, every asset in the crypto market is kind of piggybacking on Bitcoin. If Bitcoin decides it wants to test the lows again, I wouldn't expect a lot of these altcoin plays, no matter how good the chart looks. I wouldn't expect a lot of them to play out if Bitcoin decides it wants to dump again. So before taking any positions, any substantial positions, you always got to keep that in mind. You always want to take a look at the Bitcoin chart, because it does love to pull down the market with it every time it does correct. But on Ethereum here, I've got a couple short-term targets that I'm keeping an eye on. I like this 2900 zone. We've respected that. After the initial drop, we came back up, touched that once. Again on the 26th, we do have a lower high here off of the last time we touched that zone, but we do not have any bearish divergence. And underneath that, from this low on the 23rd to this next low on the 30th, we've got bullish convergence, which is you've got your negative momentum on the MACD starting to wane as the price is making higher highs, implying that this bullish, it's a continuation form of divergence or convergence. And right now we're kind of dead center in the middle of this zone, between about 2400 and this high at 27. So those are the main ones I'm keeping an eye on. Again, Bitcoin's the leader. You got to keep an eye on Bitcoin. But what I did want to bring up is we are retesting as we speak. We're starting to get some more positive momentum building on the MACD here. You've got this nice piercing line reversal candle on the 4-hour, engulfing the last two candles, the last two 4-hour candles. So we might come up and retest this 37 zone. If we break that, I would be looking up here to 39 and again to 40,000. And we do have just a fantastic chart going on here with Doge today. If we're on the 4-hour chart right now. I pointed out the other day we had this hidden bullish divergence happening here off the PCZ of this harmonic, where you make the same low as you did the 23rd. You made the same low again on the 29th. At the same time, you had negative momentum building, which it's not bullish divergence, it's hidden bullish divergence, which is continuation form of divergence. Again, saying that this trend upward, making these higher lows, was going to continue. And sure enough, it looks like we want to come back up and test this 39 to 41 zone. That's probably where we're headed at the moment. Looking on the lower time frame charts, you are starting to get into overbought territory here on the 30-minute. Same thing on the 1-hour. So we might come back down. It looks like, we broke this resistance here at 33 with this big old engulfing candle on the 4-hour. More than likely, before we continue on upward too much higher, we'll probably come back down and retest, maybe not 33, but we've also got this nice resistance here at 35 that could use as a stepping stone. You get the spring, you come back down, you back test the spring, confirming what was resistance is now support, And then that gives traders another opportunity to take a long position on an asset like this. This is one, I think it's, while the chart has been great, the chart is extremely bullish at the moment. I think there's some other stuff going on in the background with Doge, and that's one reason why I continue to cover this asset. You know, you got one of the richest men in the world seems to have some plans going on in the background, and I think eventually we're going to hear about it. But that's one I'm following. Obviously, AMC is another one that, as we speak, is just going absolutely nuts still. We are on the 4-hour chart. Let me close in here a little bit. All right, where are we at? So after hours, we were sitting at about, when markets closed today, we were sitting at about 32. Since then, it looks like we are up just about an additional 20%. I'm not sure if there's news on that. If there's something driving that specifically, it's a hard one to call, but these are levels that I had on this chart. Initially, I'm sorry, jumping around a little bit here. But we're looking back, you know, this initial impulse up back in the end of January, when this asset really started getting some traction on the Wall Street bets. The Reddit, whatever sources you follow for this stuff. But after this impulse up, the same type of stuff. We got this Wyckoff reaccumulation where you get the blow off at, I think we peaked out at about 25.84. We come back down. We found support at this previous support level here. Just we fell under a little bit, down to about 529, and then we broke back above that support, or that resistance looking left, at about 722. And then the same thing we were talking about with Doge back in January. You got these higher lows starting to form. You know, you got a couple points where you made some ground, but it comes back down. And again, even after the retracement, we're still making higher lows. And as anyone who follows this asset sees, once we broke this resistance here at about $12 that we touched February 24th, March 10th, March 26th, April 26th, we broke above that the beginning of May, through May, got up as high as about $16. We came back down. So we got the spring, and then we come back down. We back tested the spring. And if we look down here on, yeah, I mean, you got arguable bullish divergence here that initially led to that initial spring. And then once we came back down, you can see the same thing we're looking for on all these assets after a nice correction like this, right? You got the MACD, negative momentum was waning. And at the same time, if you look at, it's not a great example, but you're making lower lows on the price, less negative momentum pulling this asset down. And after we got that back test of that, what is it, about $12 resistance that we kept testing, after we got the back test, that's when it went nuts, because that's something traders are going to be looking for. The spring and the back test of the spring is a very, very strong argument to take a long position. And I know there's a lot of other elements that are affecting the price on AMC, but it's still following, you know, some of these technical analysis things we're looking for here. And as far as targets go, I mean, I can't really, when you got these type of variables going on with an asset like this, the only thing you can really do is look at some of these Fibonacci retracement levels. Let me correct this here. This one was based off. I think our lowest point was down here. And yeah, I mean, that's what we did from our low down here at 535 off of our initial peak back in the end of January. The retracement of that correction brought us all the way up to the 1618 at 3850, which is a zone that I was keeping an eye on. And then this goes back all the way back here from March 26th of 2015, and then we peaked again at that 35 zone in 2016. And sure enough, it's one of the zones that, you know, we were looking for a retest of, and it also lined up with some of these Fibonacci projections. I'm sorry about this chart; it's a little cluttered here. But we are at 3204, which is just under this resistance here. It would have been real nice to see AMC hold above that. Post market, we're still at 3855. It's going to be interesting to see how that plays out. If we can hold AMC above these old historical resistances, I'm a technicals guy, so I don't throw out predictions, and I really have nothing, you know, there's no history of this asset above those levels. It's price discovery. But if we're looking at Fibonacci retracements here, you know, some of our next zones up would be 51, 58 would be the 2618. That would be pretty extreme. I mean, if we were going off like a measured move type thing off of this zone, you know, historical price action, you know, once you're above this $20 zone, it was straight up, straight down, straight up, straight down. But if we hold above that, you could very well test the 100% measured move of this asset, and you're looking at about $50. Don't hold me to that one. It's not a prediction. I'm not. This isn't an asset I'm even invested in. I'm just looking at the chart. Some of these targets could be something where these levels could be an area where traders set up, you know, sell positions, sell orders. With an asset so volatile, it's really hard to say much else. But yeah, while we're on the meme stock tickers here, I do want to take a look at GME. We had a trade set up on GME back here about mid-April, and it's the same thing. The AMC had this big old run up the end of January. It comes back down. You know, came back down all the way to about, I think we bottomed out at about $40. You got another impulse up about mid-March. We came back down, retraced down to about 100. And again, the same thing we were looking at with AMC. Got a nice momentum shifting harmonic after a deep retrace, and you start making higher lows. You sprung above old resistance, back tested, sprung again. You did fall back under that resistance again for a little bit here about mid-May. and it's just been making higher lows. You know, come up, higher lows, and just looking at some of these old Fibonacci levels, I think, you know, GME, if I was going to look for a target at this point, you know, we'd probably come back up and give that 283 zone a retest again. But the same thing that I mentioned with AMC, stocks like this that are so volatile and with these other variables at play are really hard to count on traditional technical analysis for targets. But it's just something that, you know, if traders were looking for a zone that they might set up sell orders, you know, that's something that they might be referencing. You got this high up here a couple times back in March. And I think if we're looking on the 4-hour chart here, looks like you got a wick in the kind of nice wick low at about 280. You know, so it's confluent with this zone here in March. Something I would, if I was looking for a place to get out of this asset, that's probably something I would be keeping an eye on up there at 283. And if you look down here on the 4-hour MACD from this low, May 19th, to this low we had here at about 219, the same thing. You've got higher highs on the price, the deeper levels of negative momentum. You got negative momentum building while you're making higher highs, which is hidden bullish divergence, which is, again, it's a continuation indicator that says at that point there is still a bullish trend continuing from that point on. Where it goes from here, I mean, it's any man's guess with all the attention behind it. Overstock's one I'm looking at too right now. Overstock's one we've been looking at since back here, the beginning of March. Let me zoom out a little bit on the daily chart, right? Last summer, we were up at about 130. You had the massive drawdown. But after you found support down here initially at about 60, you started making this rounding bottom formation, right? As you've got, if you look on the MACD, right, as you've got this price still trending down after that initial support, you've got your negative momentum waning, less negative momentum as the price is still coming down, which is bullish divergence. And then after that point, you can see that's where the bears lost control. And you know, we kind of got this double bottom here beginning of January. We formed this nice bullish shark, which is a momentum shifting structure, which would imply a reversal to the upside after this drawdown. And that was a correction that lasted, you know, all the way from end of August to January 1st. You got this momentum shifting structure. It comes back down. We start making them higher lows, higher lows, higher lows. And the only thing I don't like here on the daily for Overstock, and not to say this, you know, nice swing we've had up is coming to an end, but we do have some bearish divergence, which could imply, you know, the same thing we always talk about that we're looking for is you got your spring, we broke resistance, and now traders want to see you come back down after the initial spring, after you break resistance. You want to come back down and get a retest. So if I was looking for an area to take a long position on Overstock, you know, we might come back to, I know we're up significantly after hours, it looks like. Am I right? Yes. But because of this bearish divergence on the daily, we might be headed back down just to retest that, you know, this old resistance as support, and then continue on. If we're looking on the 4-hour chart, I like the 4-hour chart a lot better than the daily chart, because if you look on the 4-hour chart, we've got potentially, you've got from this point here, our low of May 13th, to this low we are putting in right now. Maybe this could have been the antagonist to this nice 4-hour candle here, but you've got bullish convergence again. The negative momentum is waning, and you're still making higher highs, which would imply that this bullish trend is going to continue upward from that point. With the daily kind of fighting you, you know, we are coming back down. Maybe we're just going to retest that 86 zone. But if we're looking for a target on the upside on Overstock here, if we do in fact break that 86 zone and hold it, you know, you got a couple different points that I would really keep my eye on. Let's see. If we are looking at, yeah, we made it up to about the 618 on the retrace. But again, you know, if we were looking at a 100% measured move of this rounding bottom accumulation, I mean, that would bring you right back up to 126 eventually. It's not something that's going to happen overnight. But if we were looking over here on the daily chart, I think that's, yeah, I've got this 103 zone, where we got this candle high close back in summer of 2020 at August 7th. That might be a first target on the way up. I would also keep an eye on, same thing, we've got this wick high right here, end of January of this year, and you also have the same wick high back in August of last summer. So traditionally, if you were looking at a harmonic like this, you know, your Casey Stubbs targets on a harmonic are always going to be the A and C, the A and C points of the harmonic, which would give you a full reversal of this this correction back here. Which, again, you know, your A and your C are also confluent with historical support and resistance from back in August. So I'm keeping an eye on Overstock. If this trend does hold above 86, I do think we're going to start testing some of these higher levels. And I'm going to pull up the weekly here, just try to further the argument here on Overstock. If you can even read it with all that stuff on here. If you look at the weekly, right, same idea. You've got your low back here in January. Just keep on making higher lows week after week. And at the same time, you've had this negative momentum converging, slowly losing this negative momentum, and eventually, and you can see this last 2 weeks, we have started getting some positive momentum on this asset again. So this could be a little bit early at the moment, but I think this could be a real pivotal point for AMC. Again, if you want to see it hold above 86, 81, I mean, I guess you could argue you kind of got a retest. I wouldn't rule it out, but if we can hold about either of these zones, it's going to be bullish for me, and both would be a buying opportunity for a long position once you see support. I think Nat's one we've been covering for a while now too. This is also a nice dividend stock here. that's something you trade off of. And Nat we've been keeping an eye on since I think originally we started looking at this one, not last year, I'm sorry, right down here. You got this nice between October and January. That's when this one really hit my radar, because obviously you've got this massive sell-off. And if we were looking at, hold on, let me do a fib retracement on this one. So from your high back in April of 2020 to where we ended up in the fall, you had an 88.6% retrace on this asset. Not only that, but same stuff we're looking for is you got your initial low. And if you look back here, looking left on this asset, you've got, you know, your 88.6% retrace. It looks like it's a little bit more than that, but it fell right back down to old support from May 20th of 2019. Tested that as support, not once, but twice. And at the same time, if you look down here on the MACD, you know, you got the double bottom, but not only that, you've got your negative momentum waning. And I think you had bullish divergence there too. Maybe not. Excuse me, I'm losing my voice here. But if we look here, after that, we're looking, you got the price was moving up with the MACD moving down, which is hidden bullish divergence. Again, a continuation. It drove us all the way up here to $4 at one point. I think that was end of March. Come back down. Even after the retrace, we're still making these higher lows. And on the 4-hour chart, same thing. And I think this is probably what got this got us a nice action we had today, right? You got these higher lows being put in on the 4-hour chart, mind you. And at the same time, you've got negative momentum building. Price going up, negative momentum building, hidden bullish divergence there, which would have implied at this point a continuation of the bullish trend. And as you can see, literally right down to the candle, as soon as traders saw this indication that this bullish trend was going to continue, you got this massive run up. You got about 9% in 4 hours on that engulfing candle there. And from here, I would look at on Nat here, if you were looking for a new position on Nat, you've got this candle close at about 368, resistance here, test it again, resistance, and again back here about almost a week ago, we tested it as resistance again, but we broke through that. We broke through that with ease, but something to keep an eye on here with Nat. You'd want to see it come back down, just like we always talk about, the spring, and then you want the back test, because look at historical data on this. Last time we broke that level Same idea. You got that massive bullish engulfing candle. We come back down. It attempted to retest this resistance as support, and it failed. And from, if you were trying to take a long position here without getting the confirmation, obviously you got wrecked pretty quick. This is a 4-hour chart, so it didn't take long. From our highs at about $4 here, it was a matter of a day. You retraced, about 20% in a day there. So that's why the back test of the spring is so important. And that would be, if you were looking for a long position on this asset, that's what I would want to see, especially after this major run up today. Tesla is another one I'm keeping an eye on. Tesla, keeping an eye on here. We've been watching it since May 19th, where we back tested. We had that initial drawdown early March off of our highs, bringing us to the bottom of this old support level here from December. We came back down. We formed this bullish shark harmonic, which is the same thing. It's a momentum shifting structure, an XABCD pattern that forms after a big correction like this. And it basically shows you that the momentum to the downside is shifting, which would usher in a reversal back to the upside. And that's what we've been watching out for here on Tesla. We got that low at about 553. I'm a big Tesla fan. I'm a big Elon Musk fan. So this is a stock that I've always been long-term bullish on. But I do think, if we continue, I'd like to see us come back. If we are looking, we got this bearish divergence on the 4-hour. You're probably going to want to see the same thing. You got this nice spring. You're probably going to want to see it come back down. It's cooling off a little bit here. You see this positive momentum waning, starting to show on the 4-hour chart. You got a couple little histogram islands of negative momentum, which would kind of be confluent of the same idea. I like this wick back here from February 23rd. We might retrace farther than that, but it would be a hell of a thing to see if we hold up at, it looks like 619. If we get the back test of this spring, that would be a new area where you could take a long position on Tesla if you were looking at it, because it's easy to identify. Once you back test this level as support once again, it gives you an area to set a stop loss, because if you've tested it, as you can see on the 4-hour chart, we tested it at the end of last week, came up off it a little bit, and it looks like we're coming back down to give it another test. If you see a back test of a spring, not once but twice, it gives you an edge to take along, because if that asset breaks that level once again after testing it twice, you want to be out of that position. At least short term, you might be able to pick up some shares at a lower price. And if we look back here, I just noticed this too. Back here in December, we got a wick low right down to this same point. So that might be an area that I would keep an eye on for Tesla to hold up at. It'd be real nice to see it hold up that 619 level. But if we do end up coming down further than that, I wouldn't be surprised. It looks like we have back tested this 614 zone, but we could very well come back down, kind of get this double bottom thing going on here at 614 as well. I would still be bullish on it. If you look, slowly been stepping its way up, making higher lows every time. Every time it comes up, comes back down, back tests, same thing. After this point, we came back up. After we sprung, we came back and we back tested. If we move our support back up here, maybe that's the one right there. You know, once we broke, and that's 611. I mean, they're all right around in the same zone, but if you look here closely, you know, we got that candle high close at 610 with this bullish engulfing candle breaking through that. We never came back down to test that. And, you know, that would be a logical support level to retest if it does make it that far. You could argue this is kind of a distribution pattern here. But I like I said, I like this 619 level too. Historically, it's got context. And if you look locally here too on Tesla, all of this whole zone, you've got a lot of levels in here that we could come back down and retest before making another high. And if you guys are in the chat, I just want to let you know I don't have the chat. The chat's not showing up for me today. So if I'm missing any of your guys' requests, feel free to drop me a line on Twitter at Trade Nomadic. And I'm going to be at my computer tonight after the stream too as well. I can take a look at anything you guys are looking at. I'm keeping an eye on gold and silver still. Those are both two assets I've been riding out for a little bit here. And these are long-term plays here. I'm on a weekly chart here for GLD. We were looking back here in March at GLD. Let's see. Because the same idea that I keep, and I can't stress it enough. You know, same thing. We broke above. This was COVID crash, sprung above this old resistance, and this is resistance and support dating back to 2012. We talked about this one on stream, but we broke above that. We came back down and retested it, and then you got this XABCD pattern. It comes back down and retests it once again. This is back from last summer is when we got our first retest. We retested it again with this momentum shifting structure here, and since then gold has been on a tear. But if you look, I'm on the weekly. We're starting to get into overbought areas on the RSI on the weekly chart. And if this positive momentum gets any higher, we're going to end up putting in bearish divergence here on this structure. And same thing, if you look at the daily chart for gold, you've got bearish divergence on the daily. You're overbought on the daily. On the 4-hour chart, the 4-hour chart's arguable. But with the daily working against you, with the weekly working against you, I think gold needs a timeout. Same thing with silver. Silver's probably piggybacking the ride off of gold. But I really like silver for the same reason. You've got this old resistance from 2013 that was also tested back here in 2010 that we have not seen since then. But if you look, last summer we started heating up. We did break that resistance. We got rejected. We tried breaking it again back in February, and once again beginning of May we broke above that, and we have kind of started developing this wedge pattern here. We got 1, 2, 1, 2, 3, 5 touches would confirm that the wedge. You want to see 5 touches, and we've got it. I think on the daily. I think on the daily is where I was looking at that one. These aren't, these aren't the overnight superstars like some of these other assets in the crypto market or your meme stocks that are going nuts. But silver and gold long term, I think, are really bullish above these levels if they do hold. And actually, I was looking at IWM earlier here, and you kind of got conflicting variables, right? We had this cipher pattern or this cipher harmonic, which is already just about hitting your upper targets here. You want to, same thing, look for that A and C target. But the thing that I don't like about the Russell, I believe, was 4 hours starting to be oversold. You got, it looks like, some bearish divergence here. You're still making higher highs on the price, but at the same time you're making lower levels of relative strength, which, just based on what we've been talking about on the last few assets, you broke above this resistance zone here at about 222 on the IWM, and you never really came back down to back test it on the 4 hour chart here. Could be what we're looking to do short term. But my main concern with the IWM is if we invert the chart, you could argue that, if this was an asset, before I invert it, I want to show you, you kind of got this rounding top, same thing that we just saw in Bitcoin. It's kind of, to me, is arguable Wyckoff distribution, right? This is where you initially peaked at. Retail traders might not at this point realize it's the peak. You try to make another higher peak, and you do make a higher high, but after that, that's when you get a further correction, a lower low than you had previously, and then again, you're not making higher highs just yet. So, and that's where you get this inverted chart. If you're looking at this inverted chart, you got this rounding bottom. If from an inverted standpoint would be, an accumulation. This would be an accumulation, but because we're inverted, that would be to the downside. The only argument I've got against that is it does kind of look like, if you look here, these last couple daily candles have been outside of that rounding bottom pattern. So if we invert the chart back, I mean, it almost looks like, even though you've got this nice distribution, you are breaking above it. And that's something to keep an eye on. That's what I'm watching. I do want to see how it reacts above these levels. I do want to see if we pull up a lower time frame chart here.
And we're just about out of time here.
Okay. Yeah, I think we just about covered everything. I couldn't get the chat to pull up here, so again, I do apologize if anyone had some requests in the chat for me. But again, Trade Nomadic on Twitter. If you guys got anything you want me to take a look at, I'm going to be sitting down for a couple hours. I'd be happy to do it for you. And for everyone that came out and joined us tonight, I appreciate it. If you could, smash the likes, and I'll see you guys next Tuesday at 7 p.m.